Morning, everyone. Thank you for joining us. I see we have a very small turnout today, but I also know that we have stage 3 load shedding in South Africa at the moment, and I've already received some apologies. So I think we're going to have more people watching the recording today. I am really looking forward to today's presentation. I know I am a numbers geek, but I think it's going to be really helpful. So welcome, Jodilee. Thank you for joining me today and for being prepared to do this training. I am very excited. Will you tell us all about it? Oh, you're still on mute. Sorry. It's probably my fault.
No, it's me. The little thing at the top wasn't coming down, so I couldn't find the unmute button, but now I found it. So yeah, well, thank you so much for inviting me. I'm really excited to be here. And yeah, I hope that you guys will find it valuable. Thank you for making the time to come and chat with us about how you can unlock the value in your numbers. And yeah, so I think in the adverts and stuff for the session, we kind of looked at some of the things that we're going to discuss. And this is a topic I'm really passionate about. I'm also an accountant, so numbers are just beautiful. But I think it's really important. And before we dig into kind of the topic, I just want to give a little bit about who I am and why I'm so passionate about this topic. So we'll just go to the next slide. There we go. So who is Jodilee? So I studied at Wits to be a chartered accountant and then did my articles at PwC after doing academic articles for a year. And then after auditing, I was so exhausted that I took a year off to travel the world. So for 7.5 months, we did 11 countries and we went all over to like Asia and stuff. And it was really amazing experience. And then I came back and decided I should go back into auditing. And so I was an audit manager for about 3.5 years until earlier this year when I joined Syft Analytics as head of education and training. So that's my crash course story of how I got here. And you'll see there's lots of pictures on the slide, but basically my 3 passions are education, business, and travel. I've always loved education, and leaving PwC in audit was one of the hardest decisions I had to make, which most people might think is very strange because most people don't love auditing. And while I didn't particularly love auditing, I loved the challenge and all the things I learned, and I loved the people I work with. So moving across was very difficult, but there were a few key reasons why I decided to move. And those link into some of the things we're going to discuss today. So the main reasons is in my past experience, I worked on a lot of very big listed clients, and these clients would have so much insight into the numbers in their business and what's happening, and they would be able to almost predict what was going to happen and like have really good strategies for the future. And they would have like an analytics division and a forecasting division, and they'd have people and groups of people that were employed for the sole purpose of analyzing data and getting insights and forecasting and budgeting. And I thought that was amazing. And that's, how they would grow and survive and thrive. And then if you see these little pictures on the slides, in my travels, I saw something completely different. So we spent a lot of time in Southeast Asia. And in the bottom left picture, it's not a very glamorous picture of me. But anyways, this was a little Vietnamese pizza restaurant that we found in one of the little towns we visited. And there was this really sweet lady, and she kind of adopted us in, and every day we were there, we went and ate Vietnamese pizza, and you'll see you cut it with scissors, so it's a really cool experience, but it was completely different. And here she was running with her grandson, and it was packed every evening. Everyone was coming to this Vietnamese pizza shop, and I thought, how can, like, she probably also has a lot of insight could gain, what's the best pizza she could make and how can she advertise better, all those types of decisions. But she doesn't have a whole group of people that can, go and she doesn't have a budgeting and forecasting and data analytics team, it's just her and her grandson. And the next one is a picture of the team that took us up to Poon Hill. We did a hike in Nepal, and you'll see the guy in the red over here. This is the guide, and they have this little local Nepalese trekking company, which is amazing. If you ever go to Nepal, you should use them. I'll give you their details. But basically, they don't have time to go and figure out, which package and which price and which all these things. They're busy hiking the Himalayas, And so it really got me thinking that, like, what happens if all these small businesses could also have tools and could also take some time to do this analytics and make better decisions going forward? And the more I learned about Syft, the more I realized that that's something that it really does and really helps doing. So it kind of fitted in with my passions, and it fits in with what we're going to discuss today, and hopefully show you how some of those big business, the things that the big businesses are doing, we can do as well. We just need to kind of be proactive and make decisions to do it. Okay, so I promise you this is not just about Syft. This is obviously trying to give us valuable tools on how to improve our business. But just a bit of background, if you haven't heard about Syft Analytics, it's started as a small tool. It's a proudly South African company started in South Africa. We won a whole bunch of awards, but basically it's focusing on helping you analyze that financial data. So we're going to look at some of the things that Syft helps you, some of the principles that Syft uses when it's building out its tool. What are the things that we can help people look at? And then you can use those same tools in your business. Okay, so the first, now let's get into this unlocking value in your business. And it also, the value kind of comes in, you've got all these numbers, but how is the value in there? And it comes down to the fact that we make decisions every day. So some of you might have decided to go get a cup of coffee when Tamron suggested at the beginning. Some of you might have decided not to, and now you're wishing that you did. If there's load shedding everywhere, you might have taken, left for work at the wrong time and got stuck in a whole bunch of traffic, or we decided what to wear and what to eat for breakfast. So we make all these decisions, and some of them have, they all have consequences. Some of them aren't such a big deal. It took you 10 minutes to get to work extra. Now you wish you had coffee. But ultimately, decisions have consequences. And we make lots of decisions in our business as well. But those decisions are a lot more impactful often because we're putting all of our efforts into growing this business, into, we spend our whole day working at this business, trying to sell whatever it is we're selling or providing services. And if we make the wrong decisions, that could result in really bad consequences, or at least an opportunities lost. So decisions are really important. And when we're dealing and when we're making these really important decisions, you don't want to just do them on a whim. Obviously there's a level of gut feel and understanding your industry. But if you're making a big, important life decision, like what you're going to study or who you want to marry, those big, important life decisions, we want to make them based on information, make sure that you know what the career options are for that degree, or if this person's actually nice that you want to marry. And it's the same for your business. If you're going to go and invest in new cupcakes or, start a new revenue stream, you need to make sure that you actually have data to support that. Okay, so that's kind of the first aspect, that decisions are what make your business succeed or not. And we want to make sure we have data for them. So my old company, PwC, did a survey, and they said that and they found from the survey that companies that inject big data and analytics into their operations can outperform their peers by 5% in productivity. So if we can use data and analytics in the way we're operating, we can be so much better. And obviously we want to be the best in our industry. You're building a business not to just get by, you want to grow and be the best. The next thing they found was that highly data-driven organizations were 3 times more likely to report significant improvements in decision-making compared to those who rely less on data. And that just makes sense, right? I think they probably didn't have to do such a detailed survey to know that having more data helps you make better decisions. But obviously, it's difficult for us to figure out how to get this data and how to understand this data and how to use this data. So we all have this data, and we're going to look at some of those ways today. Okay, so as we said, we're going to look at how to unlock the value. And so we understand that decisions are important. We want to be making data-driven decisions. And so how do we make those data-driven decisions? So as part of my current job, I need to kind of teach people how to get the most out of their data, how to analyze it, and specifically using our software, but all those different tools. And so I created this little example entity that sells cupcakes, and it's called Jay's Cupcakes. So I just thought it's a really cute animation. I'll include it. But it's basically, as I've been, selling these imaginary cupcakes and chocolates and everything, and analyzing that data, I've been able to see for this fictitious company how they should perhaps focus more on chocolates than cupcakes, or if you can see in the picture here, they're selling to various different Disney princesses, Tinkerbell and Cinderella. And you're able to see which customers are good and which customers are bad. So even for my fictitious company, I've been able to learn so much and, make better decisions when I'm going forward. And so, if this can be valuable in an example entity, it can definitely be valuable. But where do we get this information, right, and this data? So all of us have transactions that happen every day, right? If you've got a business, well, we're hoping that it's got transactions, it's buying stuff, it's selling stuff. Things are happening every single day. You've got to pay employees, you've got to pay for electricity and rent. All that stuff is data. And that happens in your transaction list, which you can see. I've just got an example over here. And we also have our financial statements, right? So most companies need to comply and to prepare a profit and loss and a balance sheet or some version of that. And so that's data already, right? You already have that. And often it's really sad because people see this as almost a form of compliance. When I was at university, there was always this age-old battle between management accounting and financial accounting. I don't know if any of you experienced that, but management accounting was more the operational aspect, like how is the business doing? And financial accounting is to prepare those financial statements. And management accounting would always say that financial accounting is useless because it's historic and it's in the past and you can't do anything. And there's something true to that, but it is also something we have to do. We have to report every month. So let's try and, well, not month, we have to report every year. So there's value in trying to extract information from that and value from those financial statements. So this is the starting point. If you say you don't have any data, I'm pretty sure every company at least has these 3 pieces of data, and you can use these 3 pieces of data to get value and to help your business grow, okay? And then we can go one step further and we can use it to make all sorts of beautiful graphs and look at ratios, and we're going to look at some of those. And some of those are more complicated and take a bit of time, and obviously there's always this cost benefit thing, but a lot of them are actually quick and easy to get. Okay, so I understand like unlocking the value in your data with data-driven decisions. And to me, that's really using your organization's story to help you make data-driven decisions to plan a better future for your business. So you're using all the information you have. You've done those transactions. You've made those sales. These are the past decisions you've made. And you just want to use all that information to learn from it so that you can do better in future. And if anyone has kids, you want them to learn from their mistakes as well, right? I know my mom would get really frustrated. I was really good at losing things. I became a professional when I was in school of losing things. And I think she'd be so frustrated because it's like, you lost your lunchbox yesterday. Why don't you learn to put it back in your bag so that next time you don't lose it? And it's the same thing, we tell our families and kids that, but then in our own businesses, we don't learn from our past mistakes or learn how to do better. So that's what we want to do. Okay, but before we dig in, I'm sure all of you are saying, yeah, I don't have time for this, okay? I'm so busy trying to actually run my business. Jay in the beginning is actually trying to bake cupcakes and sell cupcakes, and I'm sure you're doing something similar, and you don't have time to go and analyze this. And I can resonate with that. When I was in audit, every year they would tell us, no, you need to improve the efficiency of your audit. You need to reduce the hours that people are spending working and, improve the quality. And I'm like, oh, cool. When must I find time to do this? If you look at today, I already have 2 days worth of work that has to be done today to meet the deadline. So now when must I find extra time to go and analyze how I can improve my business or my audit? And I think that's exactly how most of us feel. I went to like a leadership training thing once, and they told us, there's all these balls and you must make sure some of them are breakable, some of them are not breakable, and you must make sure you don't drop, you can only drop some of them. But I think on most days it feels like I'm just dropping all my balls, and now you're trying to tell me I must go and kind of add something else in there to juggle. And it is very difficult. But I think it's important because this picture, I think, describes it beautifully. I saw it on LinkedIn a while ago, and basically it's all these cavemen and they're trying to pull this load, and it's really difficult because they have square wheels, and it's somebody's offering them the amazing invention of the world and saying, no, thanks, we're too busy. And I think that's often what we do when it comes to analyzing our data, is we say we don't have time to stop and learn and you get the value from this information so we can strategize going forward. We're too busy just trying to run our business. And that's important. We have to run our business. We still have to make the sales. We have to meet our client deadlines. But sometimes we could be just like these cavemen running in circles that's actually, digging ourselves a hole when we could actually just stop and figure out how to save time. And an example of this in my instance is when I was in audit, we used to do this test for one of our clients. And when I started out, we used to get the data and we used to send it to a service delivery center. And it used to take 2 people a whole week to kind of work through that data and send it back to us so we could use it. And halfway through, we developed some Excel spreadsheet thing that meant that they only had to spend 2 days doing it. And eventually, by the time I'd left, we created a bot that did the whole process for us in 6 minutes. And it obviously took us a lot of time to get there. I think it took someone 3 weeks to develop that bot, but it took us 3 weeks. And now every year it takes us 6 minutes. And so I just want to encourage you, if you're really busy and you've got a lot of stuff to do, to just try and make time to do this data analysis and to stop and try and get this value out of your information, because otherwise you could be like these cavemen, or you could be still spending 2 weeks doing something that could be quicker or that could be more valuable. But obviously, you can't just make time out of thin air. I really like this picture. We can't just add sand to the hourglass in real life, unfortunately. There is only so much time in a day. So before we go into actually analyzing our data, I just want us to just think of like, how can we make more time in our day? You know, and we obviously can't create time, but there are ways that we can kind of free up some of our time. And one of those is kind of mentioned in that example I gave earlier, where we can try and automate things. So there's things in our business that maybe we don't have to actually do. Maybe there's, if I think of accounting practices, often they, would be recording all the transactions themselves or using an Excel spreadsheet, which is great and maybe a really cost-effective way of doing it if you just look at the cost of Excel. But there's amazing software out there that makes it much quicker for you to input data and record that data and work with that data. So maybe there's things in your business like recording sales or invoices or things like that. I obviously don't know your business, but you know your business best. But maybe you can take a few hours, just like we did in our audit example, to just stop and think, what can I do? What can I automate? What can I improve? What can I try and make a bit quicker? So that's just for your operations, because if you can free up that time on operations, it can give you time to do some of this really valuable analysis. And the second thing is that analysis in itself is not quick. You'll look at when we do some of the graphs that often people don't do it because I'm not sure it's going to be valuable for me. And now I must go set up all these ratios and these graphs and then figure out what I must get from it. And that takes time, and I'm not even sure if it's going to be valuable. So firstly, we've just assured you that it is valuable. It's really going to be useful to you. But secondly, perhaps we can automate some of the setup. So maybe we can figure out formulas or using tools like Excel or other software to try and get it ready for you, so that every time you want to sit down and analyze your data, you don't have to go and draw out the graphs by yourself. So that's just another thought. And then the next one, I don't know why it says 1 and 1. I suppose it's because they're both so important, not because my numbering is wrong. But the next thing is to delegate, right? And when I was in articles and I was managing a team, this was one of the hardest things for me, because I think I'm a little bit of a control freak, and I think like highly strung, want everything to be perfect. And so it's hard to give stuff to other people because they're probably going to let you down, and sometimes they do. But I think it's important as a business owner to think, what do I actually have to do myself, and what can I rather give to someone else? Because at some point, if you're doing everything, there's a whole bunch of things you can't be doing. And if there's low value things, so those repetitive tasks, maybe you can't automate some of them, but maybe you can hire someone else to do it. And while that might cost you more, it can free up your time to go and strategize better so that you can grow your business. So those are just my 2 tips on making time. I'm sure you guys, a few business owners, probably have a lot of other useful tools, and maybe you can share those as well. But I just want to, before we dig into actually how we analyze this data, just assure you that it's very valuable, and that we have to make time for it. Okay, so now that we know all of that, what should we be analyzing? So these are just some of the aspects that we're going to cover. So key metrics, looking at more operational aspects, and then cash. And this is just how I've split it up. It really can be split up in many ways. And the first one, key metrics, that's very traditional. So at university, we studied about all the different ratios, and you do ratio analysis and financial accounting and management accounting. And we're going to touch on that, but I want to suggest that there's new and better ways of doing it. The way we used to do it at university, well, the way I learned to do it, is every year at the end of the year, you get last year's financials and this year's financials, and you compare them and you calculate ratios and you see where it's moved. But we live in a fast-paced world, right? And doing these ratios once a year is not very helpful. So we need to be doing it more often, right? And be looking at broader things. So we're going to look at all these aspects together. Okay, so what are key metrics? I already touched on it. We've got, I've just listed some of them. There's obviously a ton. There's the traditional ones like gross profit percentage, some of your liquidity ratios, got your solvency ratios. And those are all things that are, available widely. It's just a ratio, gross profit divided by sales, or current assets to current liabilities. So getting the numbers is not very difficult, but it's important to then go and analyze them. So if we look at just this silly example from my cupcake company, we can calculate the ratios, and you could create an Excel sheet that could go automatically calculate these ratios for you. And you'll note that we're not doing this on an annual basis. So you'll see this one point here I have is frequency. And that's because initially I said, I think historically financials were only kind of provided once a year. Management accounts were more often, but it wasn't really possible to get this data often. But as a business owner, you're making decisions every single day. And you don't want to take 12 months to learn that you've done something wrong. Or that you did something right that you actually need to repeat. And so the first kind of tip when you look at key metrics is to go and do it often. So I'd compare it monthly, obviously depending on the nature of your business, maybe quarterly is more relevant, or maybe your business is so fast paced, you actually want to look at it on a weekly basis. All of those are fine. And then you want to compare, right? So we're going to compare to either the previous month or to the previous year, or even to your budget, right? So we'll touch on budgeting later, but all of these are comparisons gives you more insight, and we'll see that now. And so let's look at some of the metrics here. So if we look at my cupcake company's gross profit margin, you'll see that it's great. I mean, I think 63% gross profit margin would be incredible. But we'll notice that it's really big. We'll see our OPEX ratio is low and our net profit margin is low. So it seems like this business is doing well. And if we compare it to last month, we'll see that it's got this huge growth, right? All of these metrics have improved. Our OPEX ratio was really high last month, and now it's decreased. And our net profit margin, well, we were making a loss last month, and now we're making a huge profit, right? So obviously something happened in this business that was good this month. Did we market more? Did we have a different supplier? Did we, sell more? Was there a conference? I'm not sure. The numbers aren't telling us, right? This is just your starting point. But by seeing what these ratios are, how they compare to last period, whatever the comparison is to budget, and then going and investigating and seeing, well, what happened? Which sales had this high gross profit margin? And going and investigating and finding what that story is, that fourth bullet point there. That then can inform your next decision. So those are the things I'd be asking about. And then if we look at the bottom three that are highlighted, so debtors days, credit days, and inventory days. So working capital is huge, and especially what we saw with COVID, where the whole, the world shut down and all of a sudden you couldn't get stuff. That old just-in-time method didn't always work so well. So it's something really important to consider. And also debtors days and creditors days, that's really important when you look at cash management. I went to a conference last week, a psycho conference, and Bruce Whitfield was there, and he was talking about the future of the world and with COVID and the war in Ukraine and the issues that are happening in the UK. And it really seems like the world, I'm hoping that it's not, but there's like potential recession spoken about. And when all these risky things are happening, cash flow management becomes even more important. And two key things that you can manage to do that is debtors and creditors days. So here we can see that something went well in this month, that we managed to drastically decrease our debtors days. Did we hire a new debtors clerk? Did we offer discounts? Again, I'm not sure what happened, but if we can see the story and then go and understand what happened in our business, then we know what to repeat. And if these months had been, the other way around, then instead of looking for what we did well, we could go look for what went wrong. And so obviously every ratio and every situation is going to be different in every business. But I think the kind of principle I want to get out of this is, go and calculate those key metrics, whatever they are to your business. Maybe something like debtors days are not relevant to you because you sell on cash. Then you don't have to worry about that one. But maybe there's something else that's really important to you. So decide what those key metrics are, and then go make sure that you're calculating them and monitoring them on a frequent basis. Okay, and then you'll see that I have the next one is visualize. And if we look at the next slide, these aren't the most beautiful, they're quite small, so it's hard to see. But often numbers are great, and I love numbers, but sometimes it's hard to understand just from a number. If we look at this graph and we see, okay, 6340, cool. But if we go here and we see there was this huge increase in something, then we're like, okay, it makes more sense. Especially if you aren't, historically numbers and accountant person, which a lot of businesses owners aren't. They're great at running business, but they don't get the accounting side. But you still want to be able to make good decisions for your business. And so often trying to visualize these key metrics makes it a lot easier, because now all of a sudden you can see, links. So our net profit margin and our OPEX ratio are mirrored. When we have a low OPEX, we have a high profit. So that makes sense. Obviously, we know OPEX is a key part of it, but it's just like, okay, cool, let's go focus on trying to reduce our expenses. Let's go and investigate that. So all of this analysis kind of gives you the next steps. What should you do next? And sometimes looking at it graphically helps you understand it better, and it also helps you see trends or seasonality. So now we know in August our expenses skyrocket. Did the price of wheat drastically increase, or do you use wheat in cupcakes? I'm not sure. Whatever we eat for cupcakes, did that drastically increase, and that's all of a sudden a reason. So you can see, or if you run an ice cream business, your sales will increase dramatically at different times. So it can just help you get better insights into what's happening in your business. Another example we have here is not just looking at the metrics, like those ratios we know, but looking at your specific accounts or your revenue stream. So say you sell different things. So Jay sells cake and chocolates, and you can see that chocolate sales increased dramatically in April. So everyone wanted chocolate. Maybe it was for Easter. They all bought Easter eggs or something. And then it dropped down dramatically. And then cake sales came up. And so this can help us make better insights. How can we increase chocolate sales throughout the period? Maybe we need marketing. Maybe we need, I don't know, better chocolate or cake sales. So obviously it depends on your business, but being able to see it graphically and in comparison can help you make better decisions. Okay. So that's the first one, key metrics. I don't know if there's any questions at this stage before we move on to the next kind of aspect of analysis. Cool. Doesn't seem like there's anything. We can always ask it at the end as well. Okay, so next is break even, right? So this is a ratio that obviously learned at university. I think we did it, management accounting. And I was like, cool, that's how much I need to make to break even. And I moved on with my life. And then recently I started to see the power of this metric, because this is obviously not what you're aiming for, right? No business wants to just break even, but you can't be super successful and, making record-breaking sales if you're not at least breaking even. So this is a really good number for you to keep in track, to go calculate what is my break-even point, because that's at least how much revenue I need to make. So if we'll see in this business, they have to make £18,000 because it's a UK cupcake company. So they have to make £18,000 to break even. And that's because of their fixed costs and, the variable cost mix with the profits. And so it's really important, because when you're budgeting, you need to at least make sure that you're doing this. As soon as your fixed costs increase, so say, for example, someone wants to increase your rent, then you can stop and say, well, actually, that's going to increase my break-even point. So can I sell more? So it's a really useful number. And in this case, you'll see the business is doing really well. It's got revenue of £63,000. So cupcakes is a really great business to get into, it seems. And so they're in a really good space, and they've got a high margin of safety. But if we look at the next business, all of a sudden, their break-even point is still about £18,000. In this case, it's 19. But all of a sudden their revenue drops drastically. And so it's really useful to keep track of this so that you can make sure that you're at least planning for that. And that if you see, I expect my profit to decrease next month, or something's going to happen, or my costs are going to increase, then you can at least plan and adjust for it. So that's another one I just thought to keep track of. And the next is profitability. So obviously we're all interested in profitability, but doing some analysis of it, I think is useful. So if we look at this graph of our income versus our expenses every month, now we have this in our financial statements, right? So if you look at your profit and loss, you'll have your income and your expenses. Those are two lines there. So this information is there and it's available to you. We can then just graph it. And now we can see that April, our income was way above our expenses. So that's great, okay? But in July, our expenses was above our income. And if we have too many months like this, all of a sudden we're going to be in big trouble. So just by looking at this, we can see, okay, well, what happened in the months where our incomes were greater than our expenses, and what can we do differently, and vice versa. And so we're just empowered to go learn from those mistakes. Perhaps this month you tried a great advertising campaign, which cost you a fortune, and maybe it'll bear fruit later, but maybe it won't. But at least if you can stop and analyze that, you can make better decisions going forward and see how you can repeat this month. Okay, so that's just the thinking. So if we're thinking of income versus expenses, next we can go and analyze our revenue and say, okay, cool, we've got these different revenue streams. So we sell just normal sales. We sell, we have consulting fees. So we teach people how to make cupcakes. We have chocolate sales, and then we also rent out our business. And we can go and look at how this is split. So who are we selling the most to, who are we selling the least to, and how can we change that? And again, all the decisions about what you're going to do comes down to you, the business owner. You know what's best to do. But if you're running your business and you keep investing in chocolate sales, and you're trying to push chocolate sales, and I think, or cake sales, right? So here's cake sales. No one's buying cake sales. So if you bake a whole bunch of cakes, well, all of a sudden you're going to be in trouble because everyone wants chocolates. And so it's just worthwhile to stop and think, well, what can I do better? How can I grow my business? How can I increase these cake sales? Okay. Then next is expenses. So I think this is specifically topical because, again, at that conference, they were saying, if we're going into tough times, you can obviously try and increase your revenue as much as you can, but the best way to survive is just to see, another key aspect of survival is, cutting costs. And obviously we can't stop buying ingredients for cupcakes, but we can try and understand where are our top costs, because maybe it's something you didn't even know. Here, this cupcake company's greatest expense is printing and stationery. Now, maybe that's the outside for when they, deliver goods, but maybe they should start thinking of different ways. We'll give you a discount if you bring your own Tupperware or something. It's a silly example, but if we're not aware of what our highest expense is, then we can't make decisions and strategize and innovate going forward. We're just going to keep going as we did before. And 52% of our whole business expenses is going to be printing and stationery. But if we stop and think about it, we can maybe innovate and see, is there a lower cost provider? Do we need to make so many pamphlets? Can we maybe go digital? Different things like that. Okay, so that's kind of the key metrics that I would consider. Okay, next up is another kind of aspect of things to analyze, and those are the more operational aspects. So for now, everything we've looked at, it's literally just taking your profit and loss and your balance sheet and using that information on a monthly basis or however often you want to go and look at these ratios or to graph them. That's pretty much what we've done. And that's super powerful. As an accountant, obviously, I love all those financial aspects. But there's a few other aspects that we can consider. So we can look at how our customers interacting with us. And with the information we have from the transactions that you're doing every single day, what insights can we gain from our customers? Same from our products. You're selling these products, you're buying them, you're selling them, you've got a markup, sometimes you have discounts. All of this information can help you make better decisions. Same with our suppliers. And then we can even go look at non-financial things. So things that aren't typically dealt with your accountant, or things that don't necessarily have to do with rands and cents. But a lot of those non-financial aspects really directly impact how much money we make and how our business grows. So those are the things we're going to look at. Okay, so the first one is customers. So I think the graphs are a little bit small. Sorry about that. Hopefully you have a big screen. But you'll see in the first graph, we selected 4 customers there. And basically the principle behind this one is, who are we selling to and how much are they buying? Okay. And we could look at things like the total sales. We could look at the growth in sales. We could look at how many discounts we're giving each of these customers. And all of these things would tell us things about how we're interacting with our customers. So if we look there, I think that Elsa Frozen is our best customer in that 1 month. Okay. And so again, now we could go and say, well, why did they buy so much? Why do they love us so much? What can we do to try and make the other customer, that's like Anna Frozen, her sister, is not buying anything from us? Okay, so how can we replicate what we're doing with the successful customer elsewhere? Maybe we've got a really great sales rep who's doing something amazing, and that sales rep needs to go and train everyone else in our team so that they can do the same thing. Maybe we've just got a really good relationship that we've built up over years, and how can we replicate that? Maybe we had more interaction with them. I'm not sure what it would be, but it's worth going and investigating that. And in the same breath, we can go and see what went so terribly wrong with Anna Frozen. Was there terrible customer service? Was there, did they not like our products? Maybe there was an issue and there was a delay. This is just kind of your starting point for kind of getting a sense as to what's going well or poorly with your customers and with their sales. Okay, then we can also go and look at so from this, we can look for growth opportunities, right? So if you've got customers that already know about you, but they're not buying a lot from you, you've already they're aware of you, right? They already know your brand, but now you can go and find ways to try and sell more to them or to kind of improve that relationship. So it's a growth opportunity. In the next graph, you'll see we're kind of looking at who we sell to basically which customers do we sell the most to and how much of our sales do they make up, okay? And this is really valuable because customer dependency is a risk, right? So it's customer and supply dependency, and I'll touch on it a bit later. But it's important to make sure that you're not selling everything to one customer, especially as we potentially go into a recession. Because if Jay is selling all of her cupcakes to Cinderella, and all of a sudden Cinderella goes out of business because no one has money for a ball anymore, then all of a sudden we're going to go out of business, or we're going to be at risk. So it's really important to keep track of this. Who are you selling to? And that's also a good way, again, of repeating that same thought process is, if I'm selling so much to the top person, Alice, how can I go and get more from the customer I'm selling least from, and that's Snow White? So it's just doing that analysis. Okay, and if we work on each of these different aspects, it can really help our business grow. Okay, so let's go look at the next few aspects of customers. So we've kind of looked at the financial aspect, so the rand value, how much are we selling to them? But we can also go look at other aspects, and you'll have this information from, the number of transactions. You could go filter your transaction list for, the customer name or something. But it's really, the next thing we should consider is how many new customers were we able to get in this month or this year? How many customers were we able to keep? So if we were able to sell to 10 customers last month, and now we only had 2 customers, what went wrong? Why didn't they come back? Now, this would obviously depend on your product. If you sell dishwashers, they're probably not going to come back again, because you only need one dishwasher every few years. But you would, depending on your customer, you'd have this expectation of customer retention, and you can keep track of that, right? And it's really important, because new customers are hard to get. So you want to make sure you're keeping the customers that you have. And so considering how many customers, when did it drop? When did it increase? If we look at this customer retention graph we have here, we'll see in January, all of a sudden we had this huge drop in customer retention. Everyone didn't want to buy. Now, maybe that's because no one had money in January because of Christmas, but maybe it's because we didn't actually engage with them. We didn't market, we didn't do anything. And so then we can learn from that to avoid that in future. Okay, and then at the bottom, we have active customers. And you can have as many people that know about you and that, know about your product and buy every now and then, but you want to keep them active, because that's how you make sales, right? A customer that buys equals revenue. So we want to keep track of that. So those are other things to consider, because again, we can then go and improve that. Okay. And then, the last ones here is also to consider recoverability and debtors management. So if you can, I'm sure most people have a list of all their debtors and how much they owe them, but it's really important to stop and analyze and say, how long have they owed me for? Who owes me the most amount of money? The normal operational things of, am I still selling to these people even if they still owe me a lot of money? And, is this really recoverable? And I think as we speak about cash later and, potential difficult times, that's really important, because you don't want to be making all these sales and you're working so hard to make delicious cupcakes or whatever else it is, and you make the sale and you never actually get the money, because then there's no point. I think Tamron had a post about that earlier this week on cash flow, and how, it's all good making the sale, but if you never get the cash, it doesn't really help you. And then the last one is early warning system. So I think another key important factor for you to go and analyze to get value out of your number are discounts and refunds. Now, sometimes we have early payment discounts, and that's a really good tool to try and fix the one we just discussed before, which is recoverability. But in addition to that, if you have to give a whole bunch of discounts or a whole bunch of refunds, that could speak to something being wrong with your product or your customer service or something, right? And so if you kind of keep track of this, how many discounts are we giving? How many refunds are we giving? Especially if your business gets a bit bigger and, you're not involved in every transaction, then this is a really kind of good early warning system. So you can say, wait, what happened? Is my team not doing something right? Or is the product I'm getting from my supplier not good? So that's something to consider. Okay, so it's everything on customers. Next is products. Now, obviously, this isn't super relevant if you're a service business, but I think there's still some principles there. So again, the first one is, which products are doing the best and which products are doing the worst. Perhaps you love making chocolates, but if no one wants to buy them, then you need to focus your marketing and everything somewhere else. Or you need to figure out how to improve it. So yeah, Zoo chocolates are not doing well. Tinkerbell cakes are just coining it. And so we need to go and see how we can make sure that that's split and everything is kind of doing well. Again, the other thing to consider is profitability per product. So if you can work out some gross profit per product, that's really helpful, because your sales price might be like the biggest for chocolates, but if your costs are really high, then you actually should probably focus on different products. So all of these things are just about making sure you're focusing your time and attention where it matters. There's no point trying to push the sale of something and it makes you a really small gross profit or net profit. And so it's important to understand, what is my net profit per product? What's my gross profit per product? Gross profit per product. There we go. That's hard. And making sure then that you're focusing your time and attention. And it kind of speaks back to initially we said, you're too busy running your business, but are you too busy running your business not to make a profit? It's like you're so busy pushing and selling and doing all these things, but is it the most valuable activities that you could be doing? And maybe it is, that's great, but at least make sure that you are. Okay, we speak of customer dependencies again, and I'm going to chat about that a bit more when we talk about suppliers. And returns and discounts, it's the same principle, right? If you have a whole bunch of returns on your products, exactly the same. It's just a different way of looking at it. Okay, and then finally, we're going to talk about suppliers. So again, here you'll see I have a graph that looks very similar with all my suppliers. And this is really useful for a few things. So firstly, who are you most dependent on? I don't know if you guys saw in the news earlier, I think it was this year, there was a huge baby food shortage. Okay, and it really intrigued me because I thought, surely, it's America, first world country. I think often we think that, but they ended up having, I think there were 2 incidents. Because of COVID, there was shortages, and then there was a recall of one of the key suppliers. So they had to take all their products back, and they made up about 25% of the nation's baby formula. And just because of these 2 incidents, approximately 43% of baby formula was out of stock. Now, obviously, for some mothers who have other options, it's not the end of the world, but there was a whole bunch of babies that couldn't get baby formula and they desperately needed it. And I thought if a big country and big companies can make that mistake, we definitely don't want to, we want to learn from that for our business, right? We don't want to make the same mistake. And so I think taking some time to consider which suppliers are you dependent on. If Jay is making delicious cupcakes, but she gets her key secret ingredient from one person, and that person all of a sudden goes out of stock, all of a sudden she doesn't have a business anymore. So it's really important to consider that. Maybe you need to diversify, get different suppliers, or kind of have some backup stock. I'm not sure what the solution will be for your business, but it's definitely worth considering it. I think the next thing to consider is higher costs and alternative supplies. And if you can maybe try reduce costs, negotiate, if you're buying everything from a big person, or maybe you've got lots of supplies and someone's charging you a fortune, you can go to them and say, look, I've got other options. Can you give me a better price? So those are all the things you would consider. Okay, then we kind of moved on from those more operational aspects. We're going to look at cash flow, and then we'll also look at non-financial aspects. So in terms of cash flow, I think cash is king. We all know that, right? There was a study that said that as many as 82% of startups in the US fail because of poor cash flow management. And we all trying to build businesses here and grow them and make sure that they don't fail. So we need to make sure we're managing cash. And I think the world is starting to feel that cash is not free, right? In South Africa, we've had interest rates for a long time, and they go up and they go down. But I know in the UK, I was chatting to people and they were shocked because all of a sudden the interest rate went up and they don't know what to do. Cash is all of a sudden very expensive. But I think it's a really good reminder for us, and it's a really good principle. So when you're thinking of cash, it's important to go look back and look for trends, look at how your cash goes in and out and how your balance flows. So you'll see in this top graph, we have our cash in and our cash out. And in the little parts that I circled, sorry, my block is not beautiful. I'll fix that. But you'll see that in the 1 month, our cash in the second month, our cash in was way higher than our cash out. And in the first month, our cash out was way higher than our cash in. And that's something that we wouldn't want to repeat, right? Because if we have cash sitting in our bank, we could be doing something with it, right? We could be earning interest. And if we have cash out that's higher than cash in, we're probably incurring interest, or we're going to run out of money and not be able to operate. So we could go back and we could see what happened then. Is this something that's going to repeat? Can I plan for it next year? Can I renegotiate how quick my debtors are going to pay me, or how long I'm going to pay people? Should I get a short-term loan, which isn't great, but it's still better than going into overdraft? So you can plan from that. And if we look at this balance at the bottom, the same thing happened, right? So I think it's the same month. All of a sudden, we went into a huge overdraft. And if that's a once-off thing that we can explain, cool, we understand it. But if it's something that's going to happen again, we can at least learn from it and try and prevent it. So that's what I think you should go and consider for cash. And that's kind of looking at the historical. But now that we've learned those things, let's go and try and plan. So I think it's useful to have some form of prediction of what your cash is going to be. I know in my own personal life, I have the little Excel spreadsheets where I have how much my salary is and when all my debit orders are coming off, and kind of what my cash balance should be. So I make sure that I don't go spending on a spending spree thinking I have lots of money and then all of a sudden my debit orders come off. But I think in our business, it's so much more complex. So it's really important to say what invoices are coming out, what what invoice is coming in, what things am I going to have to pay, and how can I plan for this? So we have a little graph here that says this is my cupcake company and it's doing pretty well. It has a whole bunch of cash, and all of a sudden in Jan 2023, something's going to happen. Okay. And what this graph has done is it's gone and said, what are all the invoices I plan to get? So the sales I plan to make, and those are all coming in here. And what are all the things I'm planning to spend? And then those are reducing it. And so together, it's kind of giving me this future picture of what my cash is going to be. And I think that's really important for us to develop that, to say, well, what sales are we planning to make? What expenses do we know? And then we can go and say, well, sure, what's happening here? And I think in this case, the cupcake company was planning on buying a new business, investing in something. And all of a sudden now we know we actually can't afford to invest in this unless we get additional financing or something. We don't have the cash to invest in it. So that's the one kind of outcome. The other outcome could be, if you kind of look here and your graph is going all the way up, then you could realize, sure, I'm actually going to have a lot of cash coming in the next few months. What can I do with it? Because remember, cash is not free. So if it's sitting in your bank doing nothing for you, you're actually losing out. So if I'm going to be getting a lot of cash in the future, can I grow? Can I invest? Can I do something with it? And so knowing what your cash is going to look like into the future is really powerful, because you can avoid these surprises. And this is obviously on a short-term basis, which I think is really important, because you need to do it on a detailed basis. But obviously then you need to budget and forecast and do all those things as well. And I know that's not really analytics, but I think from understanding your data, you have to do something. You can't just be like, oh, cool, I'm going to not have cash anymore and then stop. No, you need to make a plan. And so planning is a key part of that as well. Okay, so that's the cash flow aspect. And then I just want to touch on non-financial aspects. So I think there's a lot of talk in the world of non-financial, and when we think of it, we mostly think of like environmental impact, and that's really important. But there's also a lot of other non-financial metrics in your business. So you'll see we have two here: store visits and number of employees. And those are not things that are in our financial statements, but you have that information, right? You have payroll, you have your number of employees, and I'm pretty sure you can figure out a way to calculate store visits or something else. And things like that directly impact on your business. If we're a cupcake business and we're selling things, the more people we can get in the door, the better chance we have of selling cupcakes. So measuring things like that and analyzing them can also be useful. So we must firstly decide what non-financial metrics are actually useful for our business. And then we can go and measure those over time and identify if there's any trends, what went well, what went bad, and if we can do change it going forward. And we can also try to do links. So maybe the more employees you have, the more store visits you have, because maybe someone can go stand on the corner and try and like get people in. Or maybe the more employees, the worse it is, because your employees are terrible. But you can go and try and do these links and try and see how you can, improve your business based on these even non-financial aspects. Okay. And then the kind of last two things I want to chat about is just comparison. So comparison and then like cleaning up your data. So for comparison, we've already chatted about how you can compare yourself to last period or last year or to your budget. But sometimes it's also useful to compare yourself to others in the industry. Now, this information is a bit more difficult to get. We obviously do have cool tools to help you do it at Syft, but even if you don't have Syft, there's other financials in them. So there's a whole bunch of public entities, and yes, they might not be exactly the same as yours, but you can be like, okay, I am a restaurant. What restaurant is listed? They're like the best. That's where I want to be. So if they're managing to get a gross profit percentage of 10%, then I want to also work towards that. Or I'm way better than, and that's cool. And so you can kind of go through and compare yourself to other people. And if you don't have tools, this might take a bit longer, but it's really valuable. So if we look here, we're looking at more activity aspects. So my cupcake company has way fewer active customers and new customers than others in the market. So everyone else is managing to get new customers and I'm not. If we look at sales, my number of sales is trailing terribly, right? So we can go and look at all these things. We can also look at financials, and this is more of the information you'd get from their financial statements. We can see that our total income is like far above. We can see that my gross profit margin is on par and my OPEX ratio is on par and my net profit is way above. And we can see that I have poor cash problems. So now I can say, well, if the best in the business has better cash management than me, then I better also get better cash management. And if my income is outperforming, how am I managing to get better income when I have lower sales? Or maybe it's because my price is too high, or my expenses are too high. And you won't be able to exactly be like them because every business is different and they probably have economies of scale, but you can definitely learn things from it. So when I looked at my cupcake business at one point, it had much higher it had a much higher gross profit than everyone else, but way lower sales. And my costs were way lower, I think. And basically from that linkage, I could say, sure, my cup, I think my cupcakes are like 200 pounds a cupcake or something. So that's like very unrealistic. It's way too high. So no one wants to buy them. So maybe if I decrease my price, all of a sudden I can start performing better. So it helps to compare yourself to your peers. Okay. And then the last thing I just want to talk about is clean data. So obviously I was an auditor for a million years. So this is very, very close to my heart. Sorry, when I downloaded it, this little dustbin was not there. Well, it was a little bit to the right. But anyways, in audit, the principle we had was rubbish in, rubbish out. So if you're going to put rubbish into your information, all your reporting and analysis and whatever you have is going to be rubbish. And I'm sure you know that as a business, it makes sense. But I think it's really important for us to stop and think, well, before we're going to report on the information and before we're going to make any decisions, we need to make sure that our data is clean. So we need to do a review of it. And big companies obviously have the luxury of having auditors and internal auditors, and you don't have that luxury if you're a small business. But there are ways that you can go and review your data. There's controls that you can put in place. There's things that you can do to just help make sure that the data that you're recording isn't rubbish, because otherwise the output and all these decisions that we've made are going to be rubbish. So it's important to review because there could be errors, there could be fraud, and your analysis could be wrong. So for example, if we look at this rent received graph that I have, it's telling me my rent every single month over the period. And we'll see that in 1 month, it was really high, okay? So if we haven't reviewed this data to make sure that it's correct, we could think, oh, that's great. Let's go look at that month and make sure that we increase the rent for that month or do whatever we did, so that we can try and make more money. But maybe it was fraud and someone stole money from us, or it was an error and someone just processed the invoice twice. Then we're going to make decisions about how to increase our revenue based on this month, which isn't even correct. And it's the same with sales. You could have a record sales month, but actually it was just an error. And then you go and say, oh, what happened in that month? Oh, okay, we had more marketing. But actually the marketing didn't increase revenue. It was just the fact that someone made a mistake. And so before you go spend all this time and invest in analyzing your data, I just want to make sure that you go and make sure that your data is actually worth analyzing, that there aren't these obvious areas. Now, I'm sure there'll always be mistakes. Data is not always 100% perfect, but you don't want big mistakes that are going to skew things. Because if you think about it, if your data's balance is wrong and you've got debtors that should have been written off, but you've still got them recorded, then all of a sudden your liquidity ratios are wrong. And you're going to think, oh, my current asset to current liability ratio is good, but actually your numbers are wrong. So it's important to go through and fix any errors, go make sure that things aren't recoverable, you write them off, that type of thing. Okay, so that's just my plea, and obviously as an auditor, something that's also very close to my heart. Okay, so we've chatted a lot about all these different things you can do. I've touched on some of them, but I just want to give you some resources. So obviously Excel is your best starting friend. I spent probably 16, 17 hours a day in Excel when I was in audit, and it really can do a lot. You can build things out. It obviously is a bit more time consuming, but it is great. There's other graphing tools out there as well. And then obviously there's Syft Analytics. I mean, I think it's amazing. And we do a lot of these things, so you could check us out. And then also one of my jobs was to build out Syft Campus. And at the moment it's free for all Syft users, and at the moment it's free for everyone. So you can go onto Syft Campus. And for now, we just got a few courses. I've listed them there that kind of show you how you can analyze your data. Obviously, it is how you can do it using our tool, but the principles are there. I mean, it's the things we discussed today. And looking into next year, we are looking at adding a whole bunch more courses on how you can get the most out of your data. And we're even going to, I think, partner hopefully with Tamron as well to just try kind of add some other value add courses. So those are just some of the tools that we have. And so then just to conclude, this is kind of what I hope you got out of the session, is that data-driven decisions will lead to improved success. PwC survey said it, but I think that we can see through going through this whole thing that there really is a lot of value in those numbers that you have. Every transaction that you post has insights that you can gain, and you just need to take some time to do it. So that's the next thing. You need to make time. I know it's hard, but I think it will be valuable for you. So maybe try to take some of those tips, see what can make it quicker for you. Is there a tool that you can get? Is there someone you can get to help you? Consider that. And then some of the things we analyzed, well, some of the things to consider. So we want to look at the key metrics. We want to look at those more operational aspects as well. We also want to focus on cash flow because that's really important. And then we want to do it frequently and also try visualize it so we can see it over a period and just make it make sense. And then lastly, just clean up first. And then before I go, so I just want to give you another little story. So when I was in audit, I would be given, say, inventory, and I'd have to go test this account, and I'd spend like 3 weeks getting invoices and testing it, and I'd like feel like I knew it in detail. And the partner would come and he'd look at the financial statements and he'd scan and he'd say, oh, there's something wrong with inventory. And you'd say, how do you know that? You just looked at 2 numbers. But he'd taken a step back and he'd looked at the movement in inventory and how it compared to sales and cost of sales. And based on that alone, he knew there was an issue. And he was right, because partners know things. And I think that kind of sums up this whole purpose, is that sometimes we get so caught up in our businesses and trying to kind of, get into the detail and to know what's happening and to keep all the balls up in the air. And sometimes we need to take a step back and see, well, how can I actually do something better? Maybe there's a small thing that I can do better, or if I take a step back, I'll see something that's obviously wrong that I can fix. So I really want to encourage you to try and make a bit of time to go and do some analysis. Just start off with those financial statements that you already have. And yeah, I hope that it will help. Thank you. That's all from me. If there's any questions.
Thank you so much, Jodilee. That was amazing. There was so much value in that. I really hope that people were taking notes because either that or you're going to have to rewatch the recording because that was amazing. That was really fantastic information. So thank you. You highlighted so many things that were so important.
Thank you. I hope that it was helpful. I enjoyed putting it together, and yeah, I believe in it. So I hope that it helps others.
I'm sure it will. For those of you that are here, I have put links in the chat for info on Syft Analytics and the campus and things like that. So I would encourage you, you can try Syft for free for 14 days. So it's worth just signing up and playing around and seeing the difference it makes for you in your decision making before you decide that you don't want to be paying for it. Otherwise, if you are a Farside client, you can also chat to us. We can also set up Syft for you. So that's something you can consider. I will also put these links underneath the recording in the member portal. So if you're watching the recording, you can click on those as well. If you do have questions, can you pop them in the chat now, or switch on your microphone, or let us know that you're all good in the chat so we know we can close off for the day. Is there anybody who needs to know anything about what Jodilee shared today? Anybody? Alexandra is giving you a standing ovation there, Jodilee, which I think you deserve.
Oh, thanks.
Okay.
Yeah, if anyone has questions, they can always obviously reach out to you or myself as well. I'm happy to answer them. And yeah, I hope that we can kind of not steal, that's the wrong word, but learn from those big businesses to help our smaller businesses for now grow into those big ones.
Awesome. I see Ben saying that the next topic should be predictive analytics. So
that's a really good one too.
awesome. I just entered my load shedding, so my lighting is gone, but my internet is still here, so we're all good. If there are no questions, I'm going to let everybody go because we all run businesses and we need to get going. And now we need time to add some financial analytics into what we do. So thank you so much, Jodilee. I really, really appreciated this training. I'm sure that everybody who joined did as well. And I am looking forward to doing more training with you in the future.
Me too. Thank you so much, everyone.
Thanks, everyone. Have an amazing day.
Bye.